Welcome to my midweek market meeting, 24th March 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They run on underlying TradeStation and MetaStock platforms. And that was the last slide. Let's continue with the live system. As usual, we'll start with a look at the global market. We'll start with the Australian market. For the global markets, I use Q Global running on MetaStock, and I look at the markets or stocks when I do that using the weekly daily at a glance template. Starting with the Australian index AXJO. Earlier in the last YouTube live session during the weekend, I showed that several global markets were starting to move sideways. Earlier, they were all going up. Among them were Australian market, this index AXJO, as well as FTSE index UK market and India market as well. And you will see today probably some of them are looking more bearish. First they were in an uptrend, then they moved sideways, and now they are looking bearish, though not AXJO. AXJO is continuing to move sideways. It is bound by resistance memory trendline and support memory trendline moving inside a range. There is no direction. Using Q technique, we'll wait for it to break out either to the upside or to the downside before trying any directional trade. Next, let's look at the Japanese index topics. Topics was the second most bullish global market. When I discussed them in the weekend market roundup, at that time price was at the upper boundary, and that was not a place to take new long trades. That's what I mentioned, and that is the usual Q guideline to try to buy at swing low, book profit when it goes to the upper boundary, and don't initiate new long trades at the upper boundary. That was useful again because from there price dropped quite sharply for last 2 days. In the weekly now there is a bearish headwind. That is another reason for caution, though there are trendline supports in both daily and weekly. Though the daily color is bearish and weekly is also bearish in color, bearish in shape, and we even have a bearish headwind possible reversal signal. Because of the trend lines, we are not going to take any short trade now. Neither are we going to look for any long trade in topics. What about China market? CSI 300 index. Chinese index SI 300 dropped for 1, 2, 3, 4, 5 weeks in a row after displaying the bearish headwind in the weekly chart, and in the daily also at the top it created a false upside breakout at the watermark resistance that was created by prior bearish headwind signals. Therefore, at the close of this daily candle, one would be cautious. That would be useful because price dropped from there. When it came to the weekly trend line support, I mentioned it was likely price would bounce up from there. It did for a while, and now for 2 more weeks it is coming down again. As of today, it is breaking below the weekly trend line support. It is just at the daily trend line support. If that breaks, then CSI 300 will be bearish, and one may look for shorting opportunities in weak fundamental stocks. This is no time to look for buying opportunities in CSI 300. Usually we don't look at the Hong Kong market, but let's do that today to see if that is also weakening. There were some recent fundraising by Chinese companies in the Hong Kong market. Let's look at the Hang Seng index. Interestingly, Hang Seng index also displayed the bearish headwind, possible reversal signal at the very top, dropping for 5 weeks in a row. This week's backdrop color shape are bearish, and here daily has broken decisively below the trendline support. It is looking weak. Interestingly again, HSI also displayed a bearish headwind at the very top that was useful caution. Those holding long positions in HSI, Hong Kong market, could be cautious and protect their long positions. From there, price dropped sharply, and today it dropped again below the trendline support. That is a sign to look for shorting opportunities in weak fundamental stocks. What about UK market FTSE index? FTSE index is continuing to move sideways, similar to Australian market. It is not showing the weakness in last few days that is obvious in Japanese market, Chinese market, Hong Kong market. That weakness is not there in FTSE. Moving sideways, just like the Australian market, will not try any directional trade unless it can break out of the range. And the strongest of the global markets, India's Nifty 50 index, last couple of webinars I was showing that it was starting to move sideways after a long bull run. Weekly still has many trendline supports. However, once again, after displaying the bearish headwind in the weekly chart, price could not go up. This week broke below the first trend line support. There are few more trend lines below current price. However, those are significant distance away. That distance is enough to look for shorting opportunities. In the daily also, it is having lower high, lower low, and now it has displayed a bearish flow candle that is confirming a go with flow short setup in Nifty 50. The next trend line support is some distance away. That is allowing us to take a short trade either in Nifty 50 or in constituent stocks that are fundamentally weak, or in general fundamentally weak stocks in the India market. What did we see? We saw all the global markets are weakening except two that are continuing to move sideways, Australia and UK. However, Japan, China, Hong Kong, India all are weakening for swing trading purpose. Now let's see whether that weakness is appearing in the USA market also. For that, I will use Q Elite running on TradeStation. Let's start with S&P 500 ETF SPY using the same weekly daily at a glance template. Similar to several global markets, SPY also displayed bearish headwind at the top. After that, price practically could not close higher above the watermark resistance created by the bearish headwind. Current week's backdrop color is bearish. We'll see how it closes the week. Yesterday, as of close, we had a bearish flow candle as well. Though there was no go with flow short setup. Why? Because go with flow short setup is designed for an instrument in a downtrend. However, SPY is clearly not in a downtrend. Therefore, looking at the flow signal bearish yesterday, we would not try to apply go with flow setup. All the Q trade setups have unambiguous checklists. We are supposed to apply the checklists to find trade setups. However, before applying the checklists, we are required to identify the market condition. The go with flow setup is designed for a particular market condition, that is trend following. If the market is uptrending, we will not try to apply go with flow setup for shorting. Today, price is up slightly. However, it is the middle of the day. We will see how it closes. As of yesterday's close, there was no trading signal, swing trading signal in SPY. QQQ. Let's look at a tweet that I shared yesterday, and you will see how the Q signals can be used to take precision entry into swing trades or take intraday trades as well. This is a tweet I posted yesterday, 23rd March, 11:30 a.m. 11:36 a.m. and I mentioned, is Nasdaq 100 strong today? Here is the Q Elite intraday breadth. QQQ went above yesterday's high. However, advanced decline breadth is much weaker than yesterday, and up down volume is also weaker than yesterday. And I attached the intraday breadth snapshot. Let's look at that. This was yesterday's regular hours beginning. After the market opened, advanced decline for Nasdaq 100. I'm plotting QQQ here. The internals are for Nasdaq 100. These are the ticks, advanced decline and up down volume. Advanced decline yesterday was very weak relative to the previous day, though QQQ or Nasdaq 100 itself could go above previous day's high. That was showing a divergence in breadth, and the same divergence was visible in up down volume also. I tweeted this yesterday around 11:30 a.m. Eastern Standard Time, and we have a Q Skype traders group. There I mentioned that this was a very low risk shorting opportunity. Let's see how QQQ turned out after that. Okay, before that I wanted to mention one more thing. Other than this advanced decline bearish divergence, up down bearish divergence, there was also a tick divergence shown by this line drawn here automatically on QQQ, price going up and the Nasdaq 100 tick coming down. That was a tick divergence, and also we had a bear release signal. Those were bearish signals. If we took a short trade at this point, our stop would be very narrow. We had multiple, actually 3 divergences on Nasdaq 100, and we had a bear release signal at a pivot resistance on intraday chart. But that was not all. On the daily chart, it came to the trend line resistance right at that point. So I was not only using the intraday resistance, intraday breadth divergence, tick divergence for the short trade, but also the daily trend line resistance to initiate the short trade. After that, price dropped yesterday, and today as of now it is down again. As I mentioned in the Q Skype group, I initiated a bearish trade on QQQ yesterday right at the top, and I am continuing to hold the position. Let's look at the intraday chart. I initiated, okay, this is a 10-minute chart of QQQ using Q fine-tune template. I initiated the short right at the top. At the close of the market, I had some profit. I continued to hold the position. I initiated the trade, as I mentioned in the Skype group, using verticals, put verticals, long put verticals. Today, I was watching it in the morning. It created the early range low and early range high pivot levels automatically, and price came below early range low. Therefore, I had no reason to exit the trade. I am continuing to hold the position. This was another example of precisely taking a short trade using intraday resistance, multiple bearish divergences on breadth indicators, and also the daily trendline resistance. Today's candle is so far red in traffic light color. Weekly backdrop color is bearish, shape is also bearish with an upper tail. Certainly we are not going to look for any long opportunity in QQQ for swing trading purpose. The put vertical that I initiated, I am looking to book profit at 50% of max profit, and if somebody initiated the trade using ETF, then the profit target would be either the next trendline support or somewhere where the risk distance would be covered. There is no bullish trade. If anything, one may look for shorting opportunity, but the best opportunity of course was yesterday right at the trendline resistance in the daily chart. SPY did not have any long opportunity. QQQ certainly doesn't have any long opportunity. What about DIA? This is looking stronger than SPY QQQ because the weekly backdrop color and shape both are bullish. Daily is clearly in an uptrend, but we are not going to buy now. We would have bought at the swing low. We would have booked profit at the upper boundary. Now it is close to the upper boundary, so that is not a point we would like to buy. If we exited partial position at upper boundary, we may continue to hold the remaining position, but not take new long trade now, and certainly not going to take any short trade also. It's looking strong both in weekly and daily. If price comes to the trend line support in daily, at which point it will also come to the trend line support in weekly, one of them, and bounces up from there, that will give the next swing low buying opportunity. In Q technique, we like to buy the swing lows using support and resistances in this manner. Buy at support and short at resistance. DIA is stronger than SPY QQQ. And what about IWM? Russell 2000 ETF? This is weak. Instantly we can see the backdrop color is bearish. 2 weeks are bearish in color and shape. There was a bearish headwind earlier. After that, price tried to go up, created a false upside breakout and falling down now. When price came here, broke out of the watermark resistance, at that time in the YouTube live session, I mentioned that I was not going to buy that time. It was already close to upper boundary. Our buying would have been at swing low. And I specifically mentioned in that YouTube video that if anything, I was going to look for a shorting opportunity if there was a false upside breakout. That would be useful because from there price drop. I had long positions in multiple small cap stocks. Looking at the weakness, I have exited all of them. Some of them in profit, some of them with small loss. And while I did that, I also took short trades, bearish trades in IWM using options, either using synthetic or using verticals. I don't like to use the leverage of simple options, so I used either synthetic or I used verticals. And in fact, yesterday when it dropped and came to the yellow direction line, I closed all my bearish positions in IWM. What was the result? The result was that the loss that I had in several long positions, that was more than covered by the bearish trade in IWM. Yesterday I closed my IWM position, and let me explain a little bit more on the IWM trade. I prefer to trade with verticals because I don't want the leverage, and using verticals the effect of time decay and volatility change is nullified to the most extent. So I'm just left with delta move. I think I'm quite good at identifying directional moves, so I am happy with vertical trades. And another advantage of verticals is that I don't get stopped out. I size my positions so that I am okay to accept the risk of the defined risk vertical trade. I don't have to get stopped out then. It is already defined risk and I let it play out, try to book profit at 50% of max profit, or as it hits a support for bearish trade or resistance for bullish trade. In this case, there was a yellow direction line support. So yesterday IWM dropped sharply, but I did not wait and exited the full position. But there is some more detail on the trade that may be useful. I initiated the bearish trade probably on this day when it was creating the false upside breakout, and I initiated it using fine-tune chart. Let's look at that day's fine-tune chart. But let me align the daily and intraday template. Is it global? Yes, global tracking. Go to the intraday chart. This was the day. Let me check the daily again. Yes. Let me do one more thing. I want to draw the watermark resistance of the daily chart. Let me draw that as a horizontal line here. Change it to intraday fine-tune chart. Come to the beginning of the day when I initiated the short trade. That was the day. I am not able to resize it. Never mind. I am not able to resize it for some reason. Is it because of global tracking? Let me switch that off. Okay, still I don't have the price level. Never mind. Let me check the price level. 230. It was exactly at 230, the watermark resistance. Back to the intraday chart. On this day, 230, 230, 230 is here. Let me draw the line again here. Okay. So I was looking for a false upside breakout using daily watermark resistance, and that happened on this candle. It created the early range high and early range low, then came down below the 230 price level. That would be the beginning of the false upside breakout. It came below the daily watermark resistance. So I initiated the vertical at that time, and price did go up after that. However, as I mentioned, the advantage of taking put verticals is that I would not have to get stopped out. So I didn't track it after that. Verticals are kind of fire and forget trade. After initiating the trade, after opening the position, I put a GTC order to exit the trade at 50% of max profit and forget about it for the time being. I track it at the end of the day every day. Now it went up, but there was no question of getting stopped out in the vertical position, and afterwards it fell sharply, confirming the false upside breakout in the daily chart. Now, yesterday, price initially came down. However, it recovered later. At this point, I booked some profit, but I held on to some of the vertical positions. Now, one thing I wanted to mention, the one thing that I'm trying to mention now, that when price went here, I was watching it, and somewhere here, I closed the short put leg. So I had only the long put leg left, and then I shorted the call. So here I initiated a vertical trade. I booked some profit here at this point. When price recovered, I changed the vertical to a synthetic. I had some profit, so I could take the risk of turning the vertical into the synthetic trade. When price dropped yesterday here, that was the time when it came to the daily yellow direction line, I closed my synthetic position. That maximized my profit. If I held on to the vertical as taken initially, then the profit would not be so much. But at this point, I closed the short put leg with a profit. That was with a profit, and then added short call, making it a synthetic trade. Next day when price dropped, and this time price was dropping fast, that increased the profit of the short call as well as the long put that I was holding. Right when it came to the yellow direction line on the daily chart, I booked profit. If I am checking the dates properly, not properly, right? I messed it up. But anyway, I might have messed the dates up, but that is how I traded it. Sorry about the mess up. Trying to draw the line again. Next day here. So yes, I created the put vertical here, booked some profit here, turned it into a synthetic at this position, and booked profit not at this point, that would be next day. Yesterday would be here. When it came to the yellow direction line, I booked profit, and today when price was going up in the Q Skype group, again I mentioned that this could be a time to short IWM again, and I in fact took a short position in IWM again. I used put vertical. In the beginning I used put vertical not to risk it with synthetic. That would be taking a short position using ETF. I didn't do that. I took the vertical and I'm holding on to the trend. It has some profit by now. I could short right at the top. That was the time when I mentioned the shorting opportunity in IWM in the Skype group. This way you can see how I could use, and anybody could use, any of the Q traders, shorting at the top on intraday time frame for IWM, and earlier I explained how I did that on QQQ. If I come back to the daily chart, weekly chart, it is looking weak in both daily, weekly. Yesterday price stopped at the yellow direction line. If that is breached, that will be bearish. And in fact, if I look at QQQ, QQQ is coming down from, continuing to come down from trendline resistance. If I look at SPY, as of now bearish, dia as of now bullish in the daily chart. Other than dia, all the other three market ETFs are looking weak. What about other analysis? Market level is telling us this is not a time to take long trades. And if you remember my past webinar also, I told the same thing. That was weekend's webinar. Let's now look at the sector rotation analysis. What are we getting from there? Is it telling us to take long trades or bearish trades? In real time, we can look at Q edge for the sector industry rotation. But before that, let me share the snapshot as of yesterday's close. I saved it for the session. This is the very useful 1 month to 1 day sector industry stock advance decline. For a long time, the monthly period is remaining bullish. As of yesterday's close, monthly period was still bullish, but not so much as in the weekend market roundup. And as of yesterday's close, 10-day period is bearish, 5-day, 2-day, 1-day. All these periods are bearish for sectors, industries, as well as stocks. That is clearly telling us not to look for buying opportunities. Another snapshot I created using Q edge as of yesterday's close. That is a snapshot I sometimes share. Based on Q edge, you can create these charts. It is comparing last 5 days sector performance with prior 5 days sector performance. In last 5 days, the red bars, no sector is up, all the 11 sectors are down. They are down by significant percentages, very high percentages, isn't it? Just a few weeks ago, market was very bullish. Energy in itself was very bullish. In last 5 days, as of yesterday's close, energy was down by more than 10%. Materials, another sector that was very strong earlier, down by more than 5%. Then industrials, financials, technology, real estate, com services, all are down by more than 4%. Healthcare, utilities, consumer staples are down, but by smaller percentages. Consumer staples, healthcare, utilities, all are defensive sectors. And in the 5 days prior to that, all sectors were bullish except energy. Energy was slightly bearish, the green bar. However, all the other sectors were bullish. That is showing a very clear reversal across all the sectors, not limited to some sectors. Across all the sectors, it turned from a bullish posture to a bearish posture. Therefore, sector rotation is also telling us not to take long trades. Now let's look at Q edge in real time. Today, as of now, the advanced decline breadth is bullish for sectors. 73% of sectors are up, 76% of industries are up, and 75% of stocks are also up based on S&P 1500. So the market breadth, advanced decline breadth for sector, industry, stock is bullish today. 8 sectors are up, 3 are down. We can see that in real time. I'm running QH in real time here. Which 3 sectors are down? The red bars, they are communication services, consumer staples, and healthcare. Healthcare is down by a very small percentage. Consumer staples also down by a very small percentage. Com services down by 1%, but several sectors are up by comparatively bigger percentages by 2%, 2.5, even 4.2%. Is that allowing us to buy now? No, because at the market ETFs level, we saw that none of the market ETFs are allowing us to buy. The real-time sector advance decline, industry advance decline, stock advance decline is bullish, but the ETFs are not allowing us to buy. Now let's look at the technical breadth now. This is again as of yesterday's close. In last 2 or so webinars, I showed that there were a large number of reversals in the Q Finder weekly technical breadth and mentioned that that was going to most likely, based on a very large number of bearish headwinds at that time, I mentioned that was going to most likely turn the market around, lead to a price drop. That happened, and now all signals are predominantly bearish. At that time, all signals were bullish. Only the reversal signals were bearish, and as almost always, the large number of bearish headwinds led to a price decline. Now all signals are 86% bearish, strength signals 91% bearish, trend continuation 81% bearish, and even trend reversal 91% bearish. The weekly picture as of yesterday's close, Tuesday's close, is bearish. Of course, the week is not over. And if we saw yesterday's picture, the daily picture, the technical breadth, that was also very bearish. 93% of all signals, 96% of strength signals, 92% trend continuation, and 86% of reversal signals. Everything across all categories are bearish, both in the daily interval, also in the weekly interval. That is clearly telling us not to take long trades. What about market internals? Let's look at that. Let's look at the mega cap top 20, the custom index, continuing to move sideways. Whether you look at a longer period or a shorter period, last couple of days or weeks, it's continuing to move sideways, bound by resistance trend line, support trend line. We are not going to take any directional trade at this point. Now let's directly go to the market breadth total view. That's a market breadth analysis comprised of the 2 composite indices and 4 major indices. 2 composite indices, Nasdaq, NYSE, and 4 major indices, S&P 1500, 500, Nasdaq 100, DJI. This is a total view chart, daily and weekly. Let's look at the percentage MA calculation as of yesterday's close. The percentage of stocks were 50 MA above 200 MA. That has now rolled below the average line. For a long time, it was holding above the average line. This is the slowest of the 3 MA calculations. Now this has also turned bearish. Percentage of stocks above 50 MA, that has turned bearish already long time ago. Rolled over here, rolled over again for the second time, rolled over for the third time, you may say even fourth time. Successive lower highs, that is showing clear weakness under the hood. And remember, this analysis, even this MA calculations are based on the 6 indices, 2 composites and 4 major indices. That's why this total view at one glance tells us whether the market is internally strong or weak. The last MA calculation, percentage of stocks above 200 MA, again that is also rolling over. Already rolled over one time, second time, third time, and fourth time couldn't even go to the average line. So that is showing weakness as well. All the MA calculations are showing weakness. Now, one comment I always make based on my historical study, that no significant market drop has happened without a distribution count of 2 or more. We don't see any distribution count yesterday, though the market was weak yesterday. This, by the way, this is a chart of SPY. However, the instrument is not important. I am more looking at the accumulation distribution counts. Though the market was weak yesterday, we saw that from Q Edge also, Q Finder also. There was no distribution count. That's why I am not overly concerned about a large drop. The distribution count of 2 or more may come today or may come tomorrow, but when it comes, we'll come to know of that immediately and take extra caution. There is no accumulation count also, of course. So if I combine now all the market level, sector, industry rotation and technical breadth insight together, what do we see? Firstly, the global markets are either moving sideways or they are bearish for swing trading purpose. The USA market ETFs, other than DIA, all the other 3 major ETFs, IWM, QQQ, SPY, telling us to short or stand aside. Sector, industry, stock, advanced decline breadth as of yesterday's close, telling us to short or not to trade at this point. The same is the conclusion from technical breadth from Q Finder as well as from this market breadth total view. From all angles, we are not going to look for long opportunities. Even if intraday today the market is up, we are not going to rely on that information alone to take long trades. Now, if we are going to look for short trades, we may do that in different ways. We can do top-down analysis starting with Q Edge. Let's do that. Let's look at the sectors first. This is the sector rotation table, shows the sector strength from 1 day to 1 year period, and then in real time the first column is also updated. The last 3 columns, space column, show acceleration, deceleration. Today's market is not closed yet. Let's see which sectors were weakest yesterday. They were energy, materials, consumer, discretionary. Consumer discretionary, out of these 3 weakest sectors of yesterday, consumer discretionary is weak today also, relatively speaking. The energy reversed up in real time, materials reversed up in real time, but consumer discretionary continued to remain magenta. Whereas earlier we can see consumer discretionary was very strong. Therefore, this sector may give turnaround shorting candidates. Why don't I drill down to the underlying industries first? And we can see if I sort by 1 day period, several of the consumer discretionary industries, and this is the same scorecard but for industries, and I'm only looking at the consumer discretionary industries. Several of the consumer discretionary industries were weak yesterday. Some of them are weak today also. So why don't I focus on them only? Let's first highlight the ones that were weak yesterday, which were many in fact. Let me cut out here. Focus only on them, sort by real time and see which one of them are weak today also. Let's stop at score of 50. Now I highlighted all these weak industries in consumer discretionary sector, weak yesterday and weak today also, though the market is up. Let's drill down into the underlying stocks. Now we could look at the fundamentally weak stocks by using the valuation plus growth combo smart filters, or the valuation smart filters, or the earnings growth quarterly yearly smart filters. We could look for short squeeze, we could look for nearby earnings. Usually I straight away use the combo filters, red filters for bearish trades, green filters for bullish trades, or I could look for the individual valuation and earnings filters. But today let me just sort the stocks in this weak industries, weak sector, consumer discretionary sector, by price performance in real time using this sort button. These are the stocks that are down today. Let me highlight all of them which are down by at least 1% as of now. I'm clicking the grid or radar action button here to copy the ticker symbols for these stocks, and I'm going to go to Q sonar radar on trade station and paste the ticker symbols. That will analyze all these stocks, load data first and then analyze if there is any Q short trade setup in any of these stocks, and we'll go through those stocks one by one. In the sonar, the columns in capital, full capital, they are the possible trade setups. Breakout setup, and this in this case I'm only looking at stocks that are down, and the sales are also colored in red, so those are bearish breakouts. Then we could have bounce setup, headwind setup, box setup, pullback, and trend following setup. We don't have any trade setup under bounce, headwind, box, or pullback category because none of these columns are or cells are lit up with any color. We have few breakout possibilities and few trend following short possibilities. Let's look at the breakouts first, starting with AXL. Even before looking at the chart, let's look at the information from the sonar. After open today, AXL is down by almost 7%. On a closing basis, it is down by 5.2%. That means initially it opened little bit higher from yesterday's close and then came down. And it broke down below trendline support. It is below yellow direction line, above white direction line. If it was below both yellow and white direction lines, this direction, which shows the trend, would have been in bright red color. Because it is dark red, that means it is below the yellow direction line but above the white direction line. It is giving a Q squeeze release. Relative performance is weak, and for option trading the implied volatility is low, so one may, if one is trading options, one may use that information for deciding which strategy to use. So it is not in a confirmed downtrend, it is breaking out. Today it first opened little bit higher and fell down. Let's look at the chart now. AXL is breaking below multiple trend line supports. Today it opened little bit above yesterday's close and then fell down sharply. However, it had multiple supports below opening price. Therefore, we were not going to look for a short trade using fine-tuned chart. Now it is below all the trend line supports in daily. However, it is at trend line support in weekly. Therefore, we are not going to look for any shorting opportunity. We like to short at the high point, not after it has dropped so much, and in this case it is at weekly trendline support. That is not a point to take short trades not using weekly daily charts. Now if tomorrow AXL continues to go down, then it is possible to look for shorting opportunity using intraday fine-tuned chart, especially if price comes to one of these extended trendline supports and tilts down from there on 5-minute or 10-minute chart. That could be a low risk shorting opportunity, but using weekly daily there is no short setup now. Let's look at next stock, Restoration Hardware, RH. This is looking much better for shorting, isn't it? Using Q technique, we like to short swing high. Here price came to the watermark resistance, created two bearish indecision candles at the top, created a false upside breakout. Price fell down yesterday. The upside breakout, false upside breakout was complete yesterday, but we would not short yesterday at the close because it was just above the trend line support in daily. Today it is breaking below the trend line support. In this case, one could anticipate the breakout and try to take a short trade using fine-tuned chart if one is tracking the stock in real time, or one could look for a breakout shorting opportunity at today's close. I can see yesterday price dropped with heavy bearish pressure, bearish U-turn, that is even more bearish than simple bearish pressure with very high volume. In the weekly also it is creating a false upside breakout at the watermark resistance that was created by a bearish headwind reversal signal. In fact, this bearish headwind could again capture the very high. So far, weekly price has not closed above the watermark resistance created by that bearish headwind. So Restoration Hardware, however strong the stock may be for longer term investing, for swing trading purpose, it may give a breakout setup today. But before taking such a breakout short setup, we like to align the fundamental strength also. Industry is already weak. We only looked at stocks that are in weak sector and weak industries in that sector. Now we need to look at the fundamentals, and I can see the weakness in fundamentals from the scorecard, but let's also carry out a complete peer analysis. And I am doing that using Cube Vital in real time. All the data is retrieved from Refinitiv. We already know the industry is weak, but if we wanted to see the industry in graphical form using Q Edge, we could do that. I click the cog button. Both these cog buttons are for checking out relative industry score and absolute industry performance. The industry for Restoration Hardware, home furnishing retail, and alternative industry, home furnishing retailers. The relative score of this industry is rapidly coming down across 5 days, 2 days, 1 day, and then today in real time. Over 5-day period, the score was right at the top, 146 out of 147 industries in Q Edge. And in real time today, the score is at the rock bottom, 5. That was a huge decline. And in terms of percentage move also for the industry, over 5 days, it is up by 3%, and see today in one day it is down by, in real time, more than 2%. And if we wanted to check the relative score over longer period, instead of looking at the graph, look at the scorecard, we can see the clear decline in the relative strength of the industry. Today is very weak and it is also showing deceleration. We of course would know that because we only drill down into this kind of industries. Started with top-down analysis, looked at the market is telling us to take short trades. Then we looked at a sector that was weak yesterday and weak today also. Drill down into underlying industries that were weak yesterday and weak today also. Home furnishing retail is one of them. Not only weak today also, but it severely dropped in relative score. And if I go back to the stocks fundamentals now, the valuation is overvalued. That allows us to short, though the earnings growth is there. In Q technique, we short either based on valuation or earnings growth. Here, as per Q score, it is overvalued. That allows us to short, steadily coming down. We can see that from the price performance over 10-day, 5-day, 2-day, 1-day, and today in real time also it's down. Earlier it used to be up, now it is down. And see the weakness in the industry. 100% of the 8 peer stocks of restoration hardware are down today. Well, earnings is on 24th March. That is today. So we may check whether it is pre-market or post-market. If I am trading on my own account just before earnings, I am okay to take a position, but I wouldn't take it using the stock. I wouldn't mind taking a bearish position in restoration hardware using verticals. That way my risk is defined, and I may look at the volatility of the at the money strikes and out of the money strikes to decide whether I want to take a long put vertical or short call vertical. And if the earnings is already out in the morning session, then of course I am able to take a short trade. And why don't I check that out? We can do that easily from Zenith, Metastock Zenith. Okay, let's put the stock restoration hardware in the watch list. It is down today, but I came here to see today's news event chart. Today's news and the red color news, these are major events as far Refinitiv. They are also highlighted by this fire symbol at the left. The news, immediate news is restoration is down. That is as of yesterday. So today there is no more additional news. If I want to check out the exact time for the events, let's go to events for restoration hardware event here. After market close. So the earnings is today after market close. Earnings is not in the morning today. Therefore, if I am going to take a short position, I would like to take it using vertical so that my risk is defined, and I would look at the volatility of the near money and out of the money options to decide if I should take it. If I want to take it using long put vertical or short call vertical. Industry is weak. Fundamentally, the stock is overvalued. Market is telling us to take short trades. So that would be a possible trade if somebody is willing to take a trade just before earnings. Let's look at one more stock, and from Sonar, let me look at the stocks that are going through possible short setup. Why don't we look at, okay, 3 stocks. Let me quickly look at all of them. DBI down by a large percentage. It has a bearish pressure down by 11.4%. Then I'll also look at HIB, HIBB, and of course Tesla. Let's look at DBI. Okay, it has a bearish flow, but before trying to apply the go with flow setup, I first see, as I should, whether the stock is in a downtrend. It is not in a downtrend, therefore I'm not going to apply the go with flow setup. And also it is right at trend line support in weekly daily, so not a candidate for shorting. Let's look at next one, HIBB. Again, it has a bearish flow, but the stock is in an uptrend, doesn't allow me to apply the go with flow setup. Ignore that. And last one, Tesla. This is better. It is in a downtrend. There is a trend line support, but that is significant distance away. It has a bearish flow in daily in a stock in a downtrend with lower high, lower low. Weekly backdrop color is bearish, not only in the current week, that is not complete yet, but the previous week is also bearish. So Tesla is likely going to give a go with flow short setup at the close today. Now radar showed the possibility probably in the morning session itself. So if somebody was watching Tesla using Q fine-tune chart, one could initiate a short right when price came below early range low. Stop would be just above early range high for the day. And if you are using verticals, I prefer to trade with verticals, then I don't have to worry about stop. If options are liquid, that is my preferred choice. In any case, even if you use the stock, the stop was not hit. Instead, price came down. And when price came down here on the intraday chart, you had enough profit. Profit was more than the risk distance. In Q technique, we look for 1:1 reward risk ratio. So one way to trade it using the stock would be to book partial or maybe even full profit at this point. My risk distance was covered, so my trade could be closed, and using part of the profit, I could open. If I'm using part of the profit, it is probably okay to open a simple put, or you could also open a put vertical where the defined risk is same or less than your closed profit amount. That way, in a couple of hours, you could short a stock and make it guaranteed risk free, book some profit, and also try to let profit run if Tesla continues to go down. Now Tesla is also in a sector that is weak. Consumer discretionary industry is weak. What about fundamentals? Let's look at that. Tesla.o, and after that I will end today's session. But let's see if Tesla is giving a Q360 degree short idea. %100% real time. My sound was mute for a few seconds or few minutes, not sure. The automobile manufacturers, the relative score of the industry is declining. Alternative industry score is also declining. Today's absolute percentage is also down for the main industry, and if I want to look at the longer term period, it is clearly weakening. That allows me to short. Anyway, I knew that because that's how I drill down using top down analysis. And if I look at the stock, once again, just like restoration hardware, it is overvalued. That allows me to short. 80% of Tesla's peer stocks are down today, 20 PRs. That is also showing the clear weakness. So we found possible two shorting ideas. One is in Tesla, where one could book profit already and make the trade risk free by now using fine-tuned chart if one entered the trade in the morning session. And one is in restoration hardware. Here one may wait for day's close to see if the breakout is confirmed, or one could probably take a trade in the morning session using fine-tune chart in anticipation of the trade. Okay, in the morning session I came to the fine-tune chart, didn't break below early range low. The break happened only at this point, so one could short at this point. That would be at 502.6 price level, and if I go to the daily, that was still slightly above the trend line support. So it is coming down from morning, but when it broke below early range low, it was too close to the daily support. I would not try to short it right at the support. If I could short it near the top, that would be possible in Q technique, but not when price was just above daily support. Now I would probably wait to see if it is closing below the trend line support, giving a confirmed breakout. Again, earnings is just after market close, so that is something you may keep in mind. Overall, the market is looking weak. Let's look at the market breadth intraday one more time. As of now, let's go to the last bar. Market breadth intraday. Using real time, I'm looking at Nasdaq, NYSE, two composites, and then four major indices: Russell 2000, Dow Jones, Nasdaq 100, S&P 500. If I look at the advanced decline, in the beginning, Nasdaq opened higher, very high in fact. At one point, it reached almost 2000 or 1700 at the peak. And from there, it is down now to minus 800. That is a big reversal in terms of advanced decline of Nasdaq composite. NYSE is holding better, opened above 1500, came down, but even now it is 924, but clearly the advanced decline is coming down for both Nasdaq composite and NYSE composite. Russell 2000 advanced decline is coming down. Dow Jones is holding strong. We saw on the ETF charts also Dow Jones was the strongest. Nasdaq 100, where I took a short trade yesterday, I am continuing to hold it. Advanced decline is negative now. S&P 500 advanced decline is still positive, holding on to the opening level. Therefore, NYSE and S&P 500 are stronger. Nasdaq 100 is the weakest. Nasdaq itself is also very weak. Russell is the next weak one, followed by Dow Jones, which is actually bullish, the most bullish of these six indices. Now, if we look at up-down volume, again Nasdaq started to go up first but reversed. Now it is below zero, that is bearish. Nasdaq 100 hardly could go above zero, very bearish now. Now see Dow Jones, though advanced decline is up, there is heavy selling under the hood. The up-down volume is continuing to tilt downward. Russell 2000 up-down volume is also bearish, though advanced decline is still positive. Even S&P 500 up-down volume is already below zero, though advanced decline is still positive. That is showing that though some of the ETFs, in fact three, S&P 500, SPY, DJI and Russell 2000, all of them are still positive, under the hood more selling than buying is going on in terms of volume. And in terms of price move also, using the fine-tune chart, you can see Russell 2000 coming down very close to yesterday's close. Nasdaq 100 is of course very much down, below yesterday's close, even below yesterday's low. S&P 500 also tried to go up, coming down. Dow Jones is holding up, still above the early range high. If you leave Dow Jones, all the other ETFs are showing bearishness, and up down volume certainly showing bearishness across the across the indices, and advanced decline is also showing weakness. That is confirming in real time that it is not the day to start new long trades. We'll see how the market closes, of course, and all Q swing trades are confirmed by the day's close unless somebody entered the trade in anticipation using fine-tuned chart. It's time for caution, but in Q technique, not time to stop trading. We can comfortably take low risk short trades, just like we were taking low risk long trades earlier, and make profit from that. Let's me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, which will most likely be during the weekend. Well, before the weekend also, Friday after market close, I may have a session organized by MetaStock. Once I have the link, I will share the link on my Twitter page. That would be, I think, 4:30 p.m. Friday. And then I may have a weekend session as usual. They are of different format. I look forward to seeing you in those sessions also. As always, thanks again. Keep safe. And as I always say, no reason not to do so. Trade profitably. Thank you.